May 14th as we get into the third week of the month. We got about maybe about a week and a half in the month of May. And we'll get into basically the summer holiday season of the second quarter. So right now we're right in the heart of second quarter. We got one more month in June. So June, July, August will be not a crazy volatile month, but it'd be more of a ranging month. In the month of June, July, August, those months is normally just ranging pairs, nothing extravagant. But it will be ranging. We got a lot of the institutional traders, mostly the big ones, or the main traders of certain markets. They'll be like on vacation, summer vacation. You got school going out, so basically got maybe about a good 2 to 3 more weeks of good volatility coming in. Hey, Brett. Hey, thanks for joining in. And then we get into the summer months. We got June, July, August. So June, July, August is typically a ranging month of volatility, good volume, but just average ebb and flow, which is some really good opportunity where markets will start to go in some really normal ranging conditions, which is good. And as long as we don't have anything geopolitically break off during the summertime, we'll be fine. And then getting into September, October, November is when we really get some good volatility. About September, October, November. If you really want to get some really good pips, it's going to be some really good ones. But everything gets set up during the summer months. So that's what we're getting ready to get into, as we got like I said, about 2 more weeks of this month volatility, which is really, really good. And then we get into the June FOMC rate decision after June 3rd, I believe. And then we get into June, July, summer months, part of August, and then the tail end of August is when we start picking up a lot of volatility and volume. School seasons start to come in. A lot of the institutional hedge funds traders come back from, mild vacations. So that's about it. So just real quick, just as we go with any weekly top-down analysis, just from a disclaimer standpoint, this is for educational purposes. I'm not a licensed financial advisor. So please be careful with your money. Everything we share here is just my observations, my analysis from years of experience. I got coaching students that watch this. I got clients who watch this. I have other people who just learning the trade or just kind of understand the market or just want to get a second opinion or a different perspective and just learn how to look at the charts from a smart money perspective. This is all for educational purposes. Again, anything we share here is not to be construed as financial advice or trade that you should be taking. Okay? So with that being said, now that we got that out the way, let's go ahead and switch over to the financial calendar and see what we got going on from a volatility or scheduled volatility coming in this week. Last week, we did have some PPIs and CPI news that did move the dollar, which was great. That was some good stuff. Hope you guys got into some good dollar trades, as we called out a lot of good ones, and we caught some good ones. So you see, coming in Monday, nothing for, I guess, Asian and London session, just nothing I see coming in there. So I can't say there's some big volatility coming in there. So don't worry about Sunday, Monday night. I usually do not take trades Sunday night and Monday night unless it sets up, which really does. It's really a trap day. So just be very careful with that. And then going into New York session, this is when the market will start to get a little bit twisted, right? So whatever happens on Asian and London session, be very, very careful unless you already have a long-term perspective, because in New York session, it's usually get turned around, right? So that's when the trap gets intended into the real direction. We just have the Empire State Manufacturing Index, and that's about it. Nothing really big after that. Okay. So whatever happened in Asian and London sessions, just be very careful. Most likely we'll get a reversal on Monday, or the tail end on Monday going into Tuesday. So with that being said, let's get into Tuesday. So nothing for Asian session on Tuesday. Monday going into Tuesday. London session, climate count change, blah, blah, blah. Nothing crazy. It's going to be your normal ebb and flow of the market. So this is really, really good setups. And then coming in New York session, we do get a little heat. We have Canada reports their CPI data. So that'll be at 8:30. And then at the same time at 8:30, we have core retail sales. So those are expected to provide some volatility for CAD and USD. So any of your CAD crosses, NCD CAD, odd CAD, CAD Chef, CAD JPY, Euro CAD, Pound CAD, and of course USD CAD would most likely be a ranging pair. So those two pairs, those two currencies together, USD CAD, will probably be a market that you would not want to trade on Tuesday, but afterwards you would. But for all of the dollar crosses and CAD crosses, that's something you want to look for trade setup. There will be some setup on Tuesday. Think about this. Whatever happens on the CAD crosses on Monday will most likely be reversed on Tuesday for all of your CAD crosses. Okay. Make sure that's kind of a special master tip note right there. And if you don't believe me, back test it, take a look, and you'll see for yourself on Tuesday. Okay, so we're going to the rest of Asians, the rest of New York session, nothing really big. And then we have wage price index for Australia. It'll provide a little bit of volatility, at least at a currency move, which is good. We want some volatility. Volatility is good. We want some movement. And then we get into Wednesday, right? So Wednesday, Asian session, London session, nothing really big from a showstopper perspective. And then we get into New York session, nothing. So Wednesday is no such big volatility news day on Wednesday. Typically you do, but what this means, because it's Wednesday, and Wednesday from an economic standpoint, all of your central bank processes a lot of the transactions from exchanges from different countries, with all of the shipments of imports and exports normally happens on Wednesday, the bulk of it. Whatever happens over the weekend, and then Monday, Tuesday starts picking up, and a lot of processes get completed on Wednesday. So it'd be a lot of volume, typically, just because it's an average Wednesday or Thursday midweek, when a lot of the volume of the changes happens anyway, which is good, right? So we'll get some normal range pairs, nothing crazy that would be manipulated to get like 1,000 pips going in one direction, and all of a sudden you get whipsawed or anything like that, because there's no big major critical news for Wednesday. All right. So that would happen on Wednesday for New York session. Nothing, again, really, really big showstopper from a calendar news perspective to create any type of whipsaw volatility or crazy manipulation. But there will be some volume. All right, so after that, going into Asian session, we will have some volatility. Bing, 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 for Australia. So Australia will provide some currency volatility. And hey, Joe, what's going on? Thank you for joining in. And real quick, so on Wednesday night, going into Asian session, Australia will have some volatility. Again, if Monday and Tuesday, any of your odd crosses, it seems like it's just ranging or just floating, expect some volatility to happen on Wednesday night on Australia. You'll get some traction. So anything with odd, keep in mind, euro odd, pound odd JPY, odd CAD, odd chef, odd NCD, especially odd NCD, right? So if you're in on odd NCD pairs, as we all know, odd NCDs always ranging. Okay, so when do they trend? Do they trend? Yes, they do trend. They do break out of ranges. The good thing is, as experienced trader, you can almost time exactly when it's going to range or break out of a range, right? And in this particular situation where you're going to get a red folder news on either odd or NCD, in this particular example, it's Australia dollar, I expect to see a range on this particular night, okay? Now, we're going to take a look at it technical to see which way it could go. Obviously, anything can change on Monday and Tuesday, and we'll do our best to take a look at it technically. But because we have access to artificial intelligence on day to day, it really helps us to determine what's the next day's highs and lows and next day's highs and lows. So as we see the changes of the highs and lows, we can really kind of get a really good job of predicting and forecasting what the direction of the market is going to go with a pretty good close accuracy. Okay. All right, moving on to Thursday. We have mild news on London session. We got monetary supply, but that's about it. So I wouldn't expect anything from London to be crazy. And then we have New York unemployment claims. So expect that to definitely move the market on Thursday for dollar crosses. Nothing manipulated, just movements. And then we got existing home sales. That will probably affect indices around 10 o'clock. And then we got Governor Macklem speaks for Canada. That's about it. And then nothing in Asian session. No big odd NCD or JPY news. So I think you're good there. And then we're going to wrap up Friday. Friday will not be a non-farm payroll, of course. It's not first of the month, but we do have some Canada core retail sale that will just continue to move CAD currency. By Friday, it's mostly just whatever has already happened since the reporting of the CPI news on Tuesday. It'll just be a continuation on Friday. If anything, it might be a small pullback on Friday, just for the simple fact it's trapped there, right? So it's just a pullback from the trend push that will happen on Tuesday. And then Friday will be a kind of a trap day for all your CAD crosses leading into the following week. So just keep that in mind. And then we got Fed Powell speaks at 11 a.m., which, where is he speaking? He's going to participate in panel discussing perspective on monetary policy at the Thomas Lobbits Research Conference in Washington, D.C. Okay. Well, anytime he speaks, right, as long as it's not like the G20 or G7 meeting or something like that, we can probably expect to see and hear and expect to see some volatility happen around 11 a.m. That's going to be crazy because that's like right when London session happens or ends at 11 a.m. Eastern time. So indices, big time, dollar crosses, maybe. Probably something to protect your positions on Friday, but I would definitely, this is not like the Fed testimony in front of Congress like it was about a month ago. That was crazy. That created some volatility, but I am not going to take this lightly. So I would say if you're trading indices, this is something you want to be aware of it, and gold, right? Especially dollar crosses. Okay, so that's it for our fundamental news. Let's get into the charts, shall we? Let's go ahead and start with the US dollar. All right, let me go ahead and switch my chart. Make sure. All right, so we should be seeing my charts on TradingView here. And we are looking at the dollar. This is the daily. And what's been going on? Well, let's take a look. Let's zoom in a little bit and get some of these texts out of here real quick for you. Nice. So what we had and what we talked about last Sunday was the fact that the dollar was at a very key demand zone, right? This was a very key demand zone. And if you guys recall from the last weekly top-down analysis, I said, now listen, it's bouncing here. And that means it's grabbing a lot of buy orders, right? However, if it breaks through, that means it's basically exhausted. There's no more buy orders, and therefore there's more sell order pressure to push this down, right? If it breaks through. Well, guess what? It held, right? So it held and it did a good job holding that line, and therefore it bounced up. Now, the dollar was strong and it hit right into our daily supply area, right? Which is awesome. Good job. Now, what's going to happen? Well, if you take a look at this move, it's a vertical 90 degrees. So at this point, at a key supply, yeah, it's going to be a little bit of a pullback, right? So it's going to be a little bit of a pullback, and you can expect that at least on Monday or Tuesday. Now, could it go up? It could, but it's not going to go up to this weekly level up here. This is a pretty good weekly level. Let me go ahead and go to the weekly here. This is more of a weekly strong level here. Let me go to the daily. That's more of a daily. Yes, this is the weekly right here. Yeah. So this is a weekly supply level. And that's a weekly supply. So this is a daily level. It could go up a little bit, but I will say will not create, there's no news volatility for the dollar like CPI, PPI, non-farm payroll to push this up expect unexpectedly all the way up. I could see it go up right here just for the simple fact to grab some more liquidity. If there's, I can see liquidity up here because you got a lot of retail traders are doing some buy stops, trying to catch the break. So there can be some manipulation. So I would not go long, even if you see the dollar go long, meaning I wouldn't short you a dollar, pound dollar, odd dollar, NCD dollar, keep shorting it. You may want to protect your position here because I do expect to see a little bit of a pullback. Okay. Now, the dollar has been rallying, which is really, really good. And it's basically bouncing off its just demand zone. So bouncing off of this weekly demand zone, well, what do you think that means? It's looking like it's going to buy up to the next weekly level. And these are the two weekly levels that I'm seeing the dollar could attract to leading up to June 3rd. And then when June 3rd happened, we could go up or we could go down. But I think this is going to keep pushing up, leading up into June. And the reason why is because of the little economic conditions going on with political reasons of the debt ceilings and confusion that the market has probably got prematurely happy with the possibility of a Fed pause and a Fed pivot coming up, and a lot of confusion there. So to me, aside from all that, it's just manipulation, right? So we're just going to play and trade it to supply and demand and not worry about he say or she say and what the market thinks and what the market does that. Just be aware of it. But I think because of that, it's creating some volatility. And I believe this is going to go up to the demand level, supply level. So with that being said, this is what I'm expecting. I'm expecting a little bit of pullback, maybe about to this level. And then we're going to go to this daily supply level. I believe we're going to break through that. And I can see us coming through here, or we may come here, right? I'm going to wait to see when we get to this level, as we get more market development, do we make it up here? Or we're going to make it up here? Or we're just going to make it up here and then we start coming down, right? So I'm going to call this right now for this week. I'm expect more dollar bullishness for the rest of the week. So expect a little bit of pullback on your typical trap Monday. So traders will start thinking going short. They may pop up Sunday night and then come Monday, might drop, and then Tuesday go forward, right? So this is going to be very, very important as we look like we're starting to break structure here. This would be a choke, right? So we have this the most recent lower high before we created this lower low. So once we come back, are we going to stay below this, or are we going to break through? If we break through, then we're going to create another higher high. When we stay low, then we may be in this range of conditions. So just be very, very, very aware of that. Okay. So this is going to be the key part right here at price 101.724. When we pull back, do we stay low? And if we do, are we going to be in this range attacking the low? Or are we going to pull back, manipulate traders, trapping them on Monday, thinking going short so we can pick up some buy orders here and go long, break the supply, and hit up here to fill in our imbalances that was created from this recent short, and manipulate this area a little bit, come back, pull back, get some more traders short, and then come back up here by Friday. Is that possible? Absolutely. But this would be the key deciding factor right here. So make sure you mark it on your notes, mark it on your charts. If you're looking to see what's going to be happening with the other dollar crosses, this is going to be a key pivotal point, but you won't need to wait until the rest of the week. We'll find out by much as Monday, if no later than Tuesday, what's going on, as we got the U.S. news coming in on core retail sales on Tuesday, right? This would be Monday, boom, and then Tuesday, boom, it could pop up, right? So that's what I'm looking for. I'm looking for more dollar bullishness. This is really mild demand supply levels here. This was a very strong demand level, and it looked like we got a lot of orders. We looked like a lot of traders were looking to go short and accumulated a lot of buys, and then boom. These are very, very clear, and I want to make sure this is very clear. These are very, very clear institutional activities, okay? Now, we already knew from FX Prosperity coaching students when we analyzed the dollar, we knew there was a lot of contracts in the commitments of traders report, the COT, that a lot of the institutions, majority of them, were long the dollar, right? And it was kind of hard to believe that when you're seeing this for 1, 2, 3, 4 days, right? But you got to believe the data, and then you got to look at it technically and go, if it breaks, then whatever, right? But if it holds, then most likely, which I was bullish, I said we should kind of believe what the market makers are pretty much doing from a commitment to trade report. And it was pretty obvious with the dollar being long. And we shorted euro dollar, we shorted pound dollar, we shorted all dollar and made some pretty good money. Okay. So that's where I'm at. I'm more bullishness after a little bit of pullback on Monday, possibly Tuesday, and then more bullishness on the dollar. Okay. So let's look at the other crosses. Let's move on to gold. I'm still on the data, right? So given a higher time daily bias. So as you can see, we are definitely in supply. I think that's pretty obvious. So I don't believe we're quite ready to break the historical high, right? And the reason why I say that is because once we break this historical high, just think about this for one moment. Once we break this historical high of gold, it's going to be all over news that, hey, we're in new territory. This is brand new historical territory. We're having gold at $2,125. Are you serious? That's pretty damn expensive for some gold. That's great, right? And you're going to have gold stores being in business and people selling their gold, and gold is going to be very, very expensive to buy. Golden ring, gold necklace, anything with gold, it's going to be very, very expensive. So I'm not sure we're quite there yet. I don't think the economy is quite there yet, and therefore the dollar will also have to be weak for that kind of happen, because a lot of people's investing in their money in gold and so forth. But I don't think we're quite there yet. Are we going to get there? Absolutely. But from a technical standpoint, this is pretty out of balance, if you will, right? From this swing low to this swing high, we're basically out of balance, right? We're going to need to get to an equilibrium at least before we can see more higher dollar. And the reason why I say that, that's just how the market works. The market is not going to, as much as it seems like it, it's just going to go up, go up, go up, go up. And then you're seeing $4,000, $3,000, $5,000 gold. It's just not going to happen. It's going to seem like it, just like right here. It's going to seem like it from this swing low to this swing high, right? It's just going to seem like it just keep going, keep going, and keep going, and it without ever rebalance. Did it rebalance? Well, let's take a look from this swing low to this swing high. I mean, did it rebalance to at least 50%? And the answer is yes. It sure did. And now, when you're trading this as as a market, I can tell you when you're looking at it like this, that's scary. And if you're a newbie trader and you're trading this gold and you're shorting and losing a lot of money, you're like, my God, this is never going to go down. It will always seem that way because short term, you're not really understanding the ebbs and flow of the market and how the market equilibrium theory is really at heart. This right here, it's just to induce a lot of traders, a lot of things just going on geopolitically and politically, and therefore, the gold is just really doing really well. Obviously, we had the COVID situation. It was a lot of things going on during that time. And we're talking around 2019, 2020, right? Did the market rebalance? Absolutely it did. And if you were buying here, buying here, and buying here, and you hold here for two years, would you have gotten out at break even and no losses? And the answer is yes, you would have. But you got to understand the ebb and flow of the market, and that's what we teach, right? Okay, so with that being said, we do expect the market to rebalance itself, right? And the 50% mark is right here, which is ironically around this particular peak. And this is where I have a major demand level there. So I am expecting the market, this is my last week market here, right? So I do expect the market to rebalance and continue to rebalance itself. So I'm going to expect a little bit of a pullback, and then this, that, and this right there. That's going to be my equilibrium. I got a line there. So gold, yes, I'm looking for more bearishness on gold. I think we're going to get down to around 1924. And then we should be able to start looking for possible buys. But once you get into this level, let me put it this way, Leonard, are we buying gold? Well, I'm not buying gold right now. Okay, Leonard, when are you planning on buying gold? I will buy gold when gold gets around 1950. So around 1950, that's when you can say, I think Leonard's going to start flipping, possibly looking for buys on gold. And you would be absolutely correct. So other than that, I'm looking for sells. Anything this pop, I'm shorting. Okay. So gold, short, I'm bearish, and I'm not looking to buy. Don't even ask me about buying gold. Don't even think about buying this expensive retail gold here until it gets a little bit cheaper for me. So if you want to buy here at premium, good job. I'll sell it to you, and I'll buy it from you. And I'm gonna short that damn thing. And then when it gets down here, you can buy it from me if you want to buy it up, because I'm definitely going to be buying. Right? If you want to short it, go for it. Okay, so that's gold. Let's go over to S&P 500. That's just kind of the indices of all, mother of all indices market. And as you can see, I'm marking out some pretty good supply and demand levels, right? So that's what we trade. We trade off of supply and demand because price is lagging and price moves to supply and demand from high retail to low wholesale prices, from order flow to order flow, and that's how we trade it. And as you can see here, we got some demand level that was here. It was mitigated here. It was mitigated here. We got some more buy orders. There must have been a lot of buy orders, sell orders that was accumulated in this area. Well, if you think about it, that was a big sell orders all the way down, as you can see. So yes, there was some massive sell orders here. that looks and appears to be the market makers have to come back and get some more sell orders, a lot more sell orders. And what do you think they were doing over here? Accumulating some more sell orders, and the market was starting to come down, come up, come down, come up, and it's having a hard time breaking this zone. So there's not enough sellers yet to break this zone. Once we break this zone, again, to me, this is going to be just like gold. We're going to start to become, in this regard, it's not a new territory, then this would be the bull rally, right? So we're not quite out of the bear market. I would say we're in the transition of the stock market, bear market, going into the bull market. I don't think we're quite there yet. So if you have your 401ks and you have your Roth IRA, something like that, just hold on. Just hold on. I know it's been taking a big hit, 37% hit of your retirement fund. Just hold on. The bull market is coming later on, possibly the second half of 2023 at this point. Again, I'm not trying to call the top and bottom of the market. Please don't take this as true and investment advice that says, Leonard said, my 401k should be recovered by the end of 2024, and I can go ahead and put my retirement papers in. Please do not do that. Okay. Again, just full disclaimer, I'm not a financial advice. If I was, we'll have a separate discussion with an invoice, right? So just keep in mind that as traders, we're looking at this and saying, man, this is pretty good. This is hanging on at a very strong supply level. If the dollar is weak, if the dollar continues strong in its strength, you can guarantee we are going to probably see more sell-off or more downturn on the stock market. So with that being said, this is what I'm looking at. I'm looking at more bearishness, and I think we are going to come down somewhere in here or here. Okay, so these would be the two levels I'm looking for to possibly buy. Okay, now our equilibrium is right here in the middle, right here, right there, right at this weekly supply. You see that 50% off this indicator off our trading view here. It's already marking out 50% equilibrium right here. So this would be target number one. So I'll be looking to sell off indices, or look to be a more bearishness in the indices market, specifically with S&P 500, US 30, and NASDAQ. Unless something else tells me something different and otherwise, I don't think we're out too ready to have a bull rally yet. We do have some really good imbalances here, none down here. So this is telling me that this is a very high likelihood for us to come down and mitigate. To me, this is high probability, very low probability. Okay, so I do think we're going to come back and get some more of some buy orders. Now, if you look at the weekly level, this is kind of in line with market structure. And what I mean by market structure, with our coaching students, we believe and understand the market structure. When you have a low, you have a lower high, a lower low, a lower high. This is a lower low. This looked like to be an equal low, or kind of a slightly, this is, more of an equal low. I think we're going to come back. We're going to do maybe another lower low, and then guess what? We'll be ready. Okay, this is what I'm looking at, and we'll be ready to make that move. Okay, so that's what I'm looking at from a higher time perspective. Okay, unless something develops and something tells me otherwise, we'll definitely know by this week. When the market comes back down, if it's looking, and especially if we break this low. We break this low, guess what? Yes, we are coming down. But right now, there's a couple of times we came into this demand, we went right back to supply, demand, we're back at the supply, and we're already looking bearish with a couple of daily bearish candles on a daily time frame. So I am expecting a little bit more bearishness for the remainder of the week. Once we get down here, I like to see us finally break this to get down to this level and fill this imbalance in our equilibrium area to rebalance this up. And then I can see where market makers will be ready to take this up. This could be, and if my experience serves me right, this could be a perfect good time. And I would expect this to happen Would be down here by FOMC rate decision, which is June 3rd. Make sure I get that right. That date. Yeah, okay. Yep. So that would be June 14th. Sorry, June 14th. So in about a month, right here, this is what I'm looking for. We hit this by June 14th. Guess what? I think we may see some bullishness, and that'd be a good time to do it. Okay. All right. Move on to the other market. Let's go to Bitcoin. See how Bitcoin is doing. This was my last week's analysis. So it didn't come all the way quite up. It did come back down. This is my line in the sand here in terms of where I believe price will not break. Why? Because that is the equilibrium, right? Not this one. That was the old equilibrium. But this was the equilibrium of this swing low and this swing high. That's right about that equilibrium. Okay. So it's looking like it's coming a little bit down to equilibrium, which I see it. It's great. Come back there. Could we come lower? Anything after equilibrium, it could come a little bit lower. I don't think it'll come this low, but if it does, to be honest with you, we do have some, demand here. So it's not to say that we won't have a lot of demand orders since this was the area that we broke. I wouldn't be surprised if we come down to this low, which I think we're going to come down a little bit low to about 25. I wouldn't be surprised us to see around 22, but definitely no lower than 20. We're not going to see that if we break 25. If we don't break 25, then we're just going to be in this range of conditions for about a month, and then we finally break out. Okay, so that's Bitcoin. Let me show oil real quick. I got some traders that like to trade oil, which is great. I like trading oil too, and then you get some more opportunities for oil. This would have been a perfect time to buy oil. Oh my gosh, this was great. Right in our demand zone here. Got some more buys and more buys, and it did come up to our supply zones. That was excellent. Okay, so where are we? Well, we came off of this demand zone, and it looked like we're coming right back down in this demand zone. Let me go ahead and mark this off as a daily demand zone. Okay, so I'm expecting a little bit of a bearishness around here, and this is not a bad area to go long. So I am going to look into this. So I like to see it come down a little bit lower, and then I can put my invalid zone right here so that if it does go against me, I can go ahead and hedge against it. But I think this is a very good area to where we can start looking for buys. But I am bullish on oil. Well, I want to see a little bit of sell-off on oil. I like this area. So I'm bullish on oil to come back to about 81. So that's where I'm at with oil. So if you're looking to buy oil, I tell you what, if you miss this opportunity here, right now is a good time. I don't see us breaking this low. There's a lot of oil, but if it does come back down here, it could break. It could break. But this is a very good area right now where oil is a good place for U.S. oil to go long. Now, I think this is going to make this move around the Canada CPI event around Tuesday. So this could happen. But other than that, yep, I am bullish on oil. Okay, we're on to forex pairs, starting with euro dollar. Dollar had a great sell-off. So if you caught dollar sell-off, great job, great job, great job. Okay, so let me go ahead and mark that off. So we got some, mark that off. That was daily demand. Oops, sorry. Okay, so right now we're in daily demand levels here. We have another daily demand level here. And then we got a weekly demand level there. Okay. So between this swing low and this swing high, we're heading towards our equilibrium. Isn't that awesome? Here it is. So we're heading towards our equilibrium. However, I do expect a little bit more sell-off on oil. I mean, not oil, euro dollar, for the simple fact that the dollar is strong and it's looking to be more strong, but this was pretty fast. So I do expect a little bit of pullback, like with the dollar, instead of dollars going up. This is obviously inverse correlated. So I do expect a little bit of pullback, maybe around here. And then guess what, my friend? I think we are coming down here. Okay. So other than that, if I'm going to look for the pullback on euro dollar, and then I'll be looking to short it. Okay. I'll be looking to our particular highs, particular lows. As of right now, to go down to the lower time frame on the 4 hours. Look at this vertical move, and when you see this vertical move drop, we have to rebalance, right? We may come a little bit down. I can see that happening, right? Come a little bit down Monday. Think about it, 30, 40, 50 pips. I can see it coming down. So don't be alarmed and say, oh my God, Leonard said it's going to pull back. Well, this is Monday, right? Monday is to get you to look like it's going to sell. And this is in our nice buy area right there. So you got a nice little buy daily demand zone. And I wouldn't be surprised to see some buying pressure, some buy orders to pull back. Okay. When it pulls back, we do have some imbalances here. This is a good area to sell. I would like to sell here, and I will cost average the hell out of it to sell. Either goes up maybe 60 pips. Yeah. So in this area, I'm going to be looking to sell. Okay. And I'm going to sell it. I want to sell it down here. Just I want to sell it to right there. I want to sell it down here. Okay, so I'm going to look for a pullback on euro dollar, and then we're shorting this darn thing. Okay. All right. Pound dollar. Well, euro dollar, pound dollar, same trade. Look at this. That was my last week marker. Did we go there? Yeah. Right. So we're almost at the equilibrium of this swing, but I'm not looking at the equilibrium of that swing. I'm looking at the equilibrium of this swing down here. This is my equilibrium down here. So are we going to go down there? Oh, yeah, I think we are. It's coming down now, right? It's at a very key weekly supply level. It's coming down pretty good at right there. And I do expect it to pull back though, right? Yep, just like the dollar, just like euro dollar, I do expect it to pull back. And I am going to want to get back into pound dollar, right? I want more of this. So I'm going to wait for this little pullback. It might come down. It might even come down here, believe it or not. If it does come down here, that's fine. And then pull back. Okay. But if it doesn't and it just pulls back and it pulls back up here, guess what? Yes, I'm looking to take this down here. Now, equilibrium, and I'm going to put this up so I can make sure I have my marker. This is a very good area right here to start looking for buys. I can see price coming all the way down here or somewhere right here, and then that's it. Once we start making this bull run and we make this break at this weekly supply level, and we will, that's going to be it for the bear season of pound dollar. Okay. Then we're going to start making our way up here. This is where I am seeing pound dollar eventually get up to by the end of the year. Here, definitely by the second half of the year, I'm looking for the bull run of pound dollar, which is the weakness of the dollar. But I think we're going to at least pull back, get a little bit more downside, get a little bit more rebalancing, and then we'll come back up. Okay. So I'm bearish on pound dollar. I'm gonna wait for the pound dollar pullback, and I'm gonna get in. You don't want to get in at the low. Okay. All right. So our dollar, great sold off on our dollar. Look at this was last week's market. So I had it. Hope you got into it. If not, guess what? Too late. You can't chase it now. All right. So that was a good trade. So what am I looking at now? It might come down a little bit more and then pull back. I can see it pull back all the way back up here, but let me put at least right here, and then we're coming down here. We're going to come down into this level. Okay. So I am expecting a little bit more downside, a little bit more downside on our dollars. Let it go. Too late to get in. Let it bounce back. If you want to buy the pullback, that's fine. I'm not. I will buy somewhere in this. I'm sorry. I will sell somewhere in this area. And if it comes up higher, that's fine. I'm looking to sell in this range, but I like to see it come down into this demand zone, which has not quite yet hit yet. And we have a very good discount zone here that got to get filled. And that's why I think it's going to come down. It's going to at least touch this or somewhere in the middle. And I think that would be it for our dollar. I think we're going to be in that bull run. Once that dollar gets weak, that's it. Okay, so that's where I'm looking at. I'm looking for a pullback on our dollar as well. Let's look at to NCD USD. How did this go? Whoa, dude, my analysis was dead on. Starting to scare myself a little bit. All right, so we're out of the supply, we're into the demand. Okay. What I'm thinking is going to happen, I think it's going to come a little bit into this demand. I think we're going to pull back a little bit, and then we're going to go way over here. Yeah, that's my zone. That's my zone. We've got some imbalances here, but why here? Well, if you look at this swing low here to the top of that, right? I don't like buying in premium, right? In a market factor swing, we believe in supply and demand, and prices move from order flow to order flow. When it gets into my discount zone, that's right. You are going to see nothing else but buy orders from me. All right, so I'll be bullish when it gets there. In the meantime, I'm expecting a little bit of pullback, dollar strength, weakness right here, a little bit, and then Tuesday, Wednesday, boom, drop. That's what I'm going to be looking for. I'm going to sell it. And then when it gets down here, I'm going to buy it. So NCD dollar, look for a little bit of a pullback and bearishness on NCD dollar. Okay, dollar CAD. Dollar CAD is nice. Oh, look at my analysis. Wow, this thing did pull back. All right, guess what? Yes, a little bit more CAD, dollar CAD. Just a little bit. And then guess what? We're going to go right back into this range. All right. So what I like to do is I want to wait till I see a little bit more bullishness. This is not a bad trade. I like to see that. That's a 300 pip move. I would be looking to short dollar CAD, even though I believe dollar strength is going to be a little bit more. So here's the thing. This thing could pull back now. I wouldn't be surprised to see the pullback now. And it could go well into the supply level. Okay. This is what I'm looking at right now. I don't want to short dollar CAD. This would have been a great place to short. So if you did a short down, you got 365 pip, great. I will be looking to short dollar CAD. However, I don't think that's going to happen right away. I think it's going to pull back. Look at the 4-hour time frame. See what the fractal looks like. Yeah, you see this right here? I think it's going to come up just a little bit, I think that candlestick is just going to cap it just right. I think we're going to get something like this, right? Just right. And boom, we're going to come back. We're going to fill these imbalances, these gaps. I can see it coming back, maybe grabbing some more orders, some buy orders that was here from that demand zone. You see that demand zone? See that? You see that? I like to see a little bit more, right? And then this would be a great buy, to be honest with you. However, it may not pull back that much. It may pull back just a little bit and then go long, right? This is not a bad idea. I want to buy it, but I want to see the pullback first. Let me pull back. It's only a little bit pullback either from here or here, and then I'll be looking to buy. I will go long if pound cat come down here, anywhere in this area. I want to buy. This is my zone, right? I'll paint a little box here. Right? This is my buy zone. Comes in here, I'm buying. And then once it gets up here, guess what? I'm selling. And I'll be selling for the rest of the 2023 year, right? That's because it'll be the dollar bearishness. Now, what I think is going to happen is Monday, boom, pull back. Tuesday, CAD weakness, dollar strength, right? That could happen. However, it could be ranging in this zone as well, right? So that's the tricky part. But regardless, once it gets down here, I would be looking to buy. Even if it doesn't go that high, I'm okay with coming into this area and then sell off. However, I do think it's going to come back into this area eventually. But I'm going to wait for the pullback and then go ahead and go long. Okay, a little bit of pullback, and then I'll be bullish on dollar CAD. All right, how about dollar Swiss French? Dollar Swiss French. Yeah, that was a big push up. I like that. I like that right off the demand zone. Let me pull back. Let's look at the daily. Look at that. I don't know who shorted that. That was my analysis from last week. I didn't move it. So I'm going to keep it the same, and I'm just going to do a little bit of that. So I do expect Swiss French, the currency Swiss French has just been weak. It's seasonally weak. The Swiss French index, if you ever get a chance to look at the Swiss French index, as we do with our coaching students, we looked at the Swiss French index and it's already peaked. So we do expect seasonality perspective for Swiss French to be weak for the remainder, at least for the next 2 to 3 months. And with that being said, I think, yeah, the dollar is going to take advantage of that Swiss French and kick it up to this supply zone up here. So I'm going to look for a little bit of a pullback. And then guess what? Yep, I want some of that. I want to buy dollar Swiss French. This right here is perfect. A little bit of pullback. I can see it going a little bit higher, maybe into this area. Pull back a little bit. And then this would be a good time to buy dollar Swiss French. So I'm bullish dollar Swiss French after a little bit of pullback. Okay, dollar yen. Where are we at? Well, dollar yen has been kind of ranging. The dollar, the Japanese yen was definitely strong right here. That was great. We got 2, 3, 4 days, and then it ranged a little bit on dollar yen when everything else on the rest of the dollar yen was just taking a fall, which is great. But on Friday, look at this pullback. And yep, a lot of the yen crosses as you get ready to see when we get ready to go into the other Japanese yen crosses, you're going to see a lot of them start to pull back. So with that being said, you can see where this has been holding on Japanese yen. You see how it's been trending, higher highs, higher lows, higher highs. Well, guess what? Yeah, I think we're going to see a little bit of yen weakness. Yes, yen weakness. I think this is going to, we may see a little bit of a pullback. We may see a little bit of a dollar strength into this supply zone, right? And then we may see a little bit of a pullback, but I think there's going to be more buyers than sellers in this area to get into, pick up some more buy orders here and here. Now, based on just supply and demand zone theory and imbalances, what we believe, when there's a huge imbalances by these demand zones, this make these supply zones, when we see imbalances near supply and demand zones, they make those zones very, very, very strong and like a strong magnet, right, than any other level. So there is a very good, strong case for these levels to be somewhat mitigated. Now, if it doesn't get mitigated here, this one looks very, very promising. Okay. Now, what else? Well, the other components we have, we got to look at our imbalances, right? So let's look at this swing high and this swing low. We're quite not there yet. We came close, but I think we're going to cross that 50% line. Yen gets weak. We get into this zone here. I tell you what, we get here. Yeah, I'll be looking to buy. I'll be looking to sell, right? Looking to sell here and here. Okay. So with that being said, I would say I'm looking for a little bit of a pullback. And if I'm following 1 yen cross right now. I'll show you with one. But other than that, this would be the only yen cross I'll be looking to buy. Okay. So I'm bullish on yen, dollar yen. I'm expecting a little bit of a pullback. It may pull back even far as here. But after that, I want to buy. I want to buy dollar yen. I want to get in here. I want to get up here. I want to take advantage of the dollar strength, which will be against the yen weakness. Okay. So bullish on dollar yen. That's what I'll be looking for. Pullback. And we're going to buy dollar yen. So look for that. Okay, so let's get into the yen crosses. Let's start with euro yen, and you're going to see what I'm talking about. Okay, so we got this great sell-off here off the weekly supply off a dollar for euro yen, right? Great short. Hope you short on yen, JPY, and hope you short some really good trades here. That was a nice little drop, 565 pip. I saw that drop, and it was like too late for me to get in. I don't want to overexpose myself. But you can see where it got right here, and then it started to pull back. So we got a little bit of a bullish candle here. And I believe the dollar yen is going to go up, and that means the yen would have to be weak. Yeah, I think this is going to pull back. Yeah. Okay, we're going to pull back into this area. So that's what I'm looking for. I'm not looking to short these lows. No. Right here is a change of character. We need to break that. We punched it, but we didn't break it, right? And the sell-off was just so deep. This is kind of like a 70-degree move, right? So just this alone, I do expect at least a 50% into the zone right here. And I would be looking to short once you get into this area. I do believe it's probably could come up here. I wouldn't be surprised if it comes all the way up here to this low, not take out this high. I mean, I'm near this high, not take out this high, maybe about right here, but at least fill in the imbalance, that imbalance, come about right here. Regardless, once it starts to make its area around here, this is an area I'd be interested in shorting. Other than that, I'm a little bit of bullishness on euro yen. I wouldn't be surprised if euro yen even comes into this weekly supply area. Okay, so this all right here is not where you want to buy. You want to short. So anywhere in here is short activity. Don't short it now. Wait for market comes back up. I believe it's going to come up. And then once you get into this area, If it goes against you, I wouldn't be so quick to want to hedge it. I'd be quick to want to cost average it again without a hedge. Let's look at the weekly level. I'm going to show you what I'm talking about. That's it, right? I don't think we're going to come up here. This is pretty high. We're already in a very strong supply level since 2008. So no, I don't think it's going to pass that. That means Chef JPY, Pound JPY, Euro JPY, USD JPY. It's the yen is just going to be like critically low. And when I looked at the yen index, it does have a little bit of more bearishness, but this was overwhelming strong. The yen pushed back, but I don't think the yen's going to allow themselves to get this above this level. So, okay. So with that being said, euro yen, look for a little bit of pullback. I will not be buying like I will with dollar yen. I see dollar yen more upside. I would not want to go long on euro yen. I would look for short on euro yen. But other than that, a little bit of pullback. If you want to scalp it, that's fine. Be my guest. I'm not. I would rather take the short, right? And here's the reason why. From this swing low to this swing high. Yep, that's my target. I want this. I'll take this, then have to worry about if you want to get the little 400-500 pips. You tell me, do you want the 1400? You want the 3 to 400? Now, if you want to say both, okay, that's fine. You agree. Me, if you had to pick one, trust me, I'll be looking to short. So that's what I'm doing. That's my story. And you guys already know the rest. I'm sticking to it. Okay, let's go to pound yen. Okay, so pound yen did the same darn thing. Let's go to the weekly and see how this looks. Well, obviously, we got some really good highs on pound yen, right? That's just how it was. However, this was the high of, let me see, 2007, and then we came all the way here at 2015. Could we go that high? I doubt it. That's why I have this up here for possibility. I don't think it would. And you want to be very leery of those highs, right? Don't think it would. These trend lines don't work. Let's go to the daily. Let's play this level out. Okay, so we're in this level right here. Believe it or not, it's possible we could come up to this supply level. So be very, very leery here, right? Very, very leery. This is a very strong supply level. We do have a nice imbalance here at this level here. Let me go to weekly and show you. Look at all these imbalances. These are weekly imbalances, right? Big sell-off. That means there could be some very strong sell orders up here. Very strong. So if we go to the daily, we're talking about 1,400 pips. That would be scary, but I don't see that happening. It could, but I don't see that happening, to be totally honest with you. So here's what I'm saying. I'm with the yen, euro yen on this one. I am going to expect a little bit of pullback. Let's see some yen weakness. I'm going to say this is possible that we could take out this high on pound yen. Okay, that pound yen was a weak drop compared to euro yen, and compared to dollar yen and some of the other yen crosses. This pound yen was weak. That was weak, and it's not even taking out this low. So to me, we're going to see a higher high. Okay, and if I'm wrong, you guys can hate me later, but I'm going to stay safe than sorry, and not try to say, hey, I love pound yen, I love the trade, I love trade the London Dragon as well. I love it. I do expect it to come down. However, I'm not in in tune with, from a technical standpoint, to say that I am clearly evident that pound yen is ready to drop. Okay. Yeah, this is, it hasn't even take out this low. Now, if it take out this low and it come down here, then I'll be looking for a pullback, make sure it doesn't take out that high. That's where I would want to short it right there, because I didn't get a chance to short it here. You can call me chicken, but I just wasn't confident about shorting that. I picked another better yen cross pairs and got 600 pip, and that was way better. Short JPY. I was not looking to short pound yen, and I love pound yen. But right now, pound yen is not loving me, right? It's not giving me the love setup. So if it's not giving me the love setup, guess what? I don't want to buy you. I don't want to sell you. I don't want to mess with you. I'm good. Leave me alone. Right. I'll pick someone else who's more attractive. Right now, you're looking ugly. So with that being said, I think pound yen could be seeing higher prices. I'm looking to see equal low to see what it does up here. It is showing a daily bullish candle. It's not breaking out this low. And that concerns me. It didn't even come down to this demand level. It didn't come all the way down. That concerns me. So that means possibly higher prices, and it does have a good reason to do so, right? So let's be careful here with pound yen. If you want to trade pound yen, I wouldn't recommend shorting it, even though it looks good, but it's not that good. It's not compared to the other yen. Okay, so be careful. Wait, look for a pullback. If not, I'd be shorting this, but not until it breaks and not until it confirms hold below that. Okay, pound yen pullback. I'm gonna be bullish on pound yen. Okay, CAD yen. CAD yen. That was a nice, I would say, nice 2-day drop. That wasn't too bad. I like that from this supply to right there, 179. But guess what? It didn't come down to our demand zone here. Didn't come down to this demand zone. Tell me if you see it. You get what I'm saying? Yeah, I think so. Look at all this. I think so. That's where I'm at. So I feel this imbalance. That's great, but I'm not convinced that Hedgen is done. It didn't even come close to our 50% of this swing right here, guys. So a little bit lower, almost. So I think it has a little bit more upside to go before it's ready to come down. So with that being said, let me go ahead and change my analysis here. It's the common thing, right? Dollar yen, euro yen, pound yen, got some imbalances here. We're in this nice supply level. I think we're going to come back to this supply level one more time. And I think we're going to break this one. I like to see, believe it or not, I like to see CAD yen get up here, right? I think CAD's going to be a little bit weak for dollar CAD. I'm not sure, but I know it's going to be slightly stronger than, the yen. So I like to see this, but right now I'm not convinced to shorten CAD yen yet. This is not a really good place to sort it. Right here was, right here was, but when I'm seeing lower lows, lower highs, lower highs, lower highs, That's not a really good fun market structure. Would you agree? Lower highs, lower highs, lower highs. You don't want to short that unless you get a break, right? It's not breaking this structure here. Okay. Not breaking that structure. So for me, yeah, I think it's gonna do this. Okay. It hasn't break that structure for me. So if this is not a really good edge setup for me. No, I'm not convinced. I like to see a little bit more would you guys agree? I want more retail price. I want more higher prices. Give me a better price. Give me up here. Give me like that. Give me something up here. Give me up. I short that, and if it goes against me, I'll be willing to short it again. That's okay. Right. This is the good trade. You want to short it. You want to short it here. You want to short it up here. You want to short it up here. Do not short that. I would not recommend that. CAD-yen, a little bit pullback, bullishness. It's not ready. RGM, did I change chart? That kind of looked like a CAD-yen. That that's not good. Just okay. So we went to the supply area, came back down, came up, came back down. It didn't even create a lower low. That's not good. Got a low, lower high, lower low. That's a lower high, lower low. That's a lower high, lower low. Didn't break that high, and didn't create a new lower low. If we created a new lower low, then I would say we got a nice potential break of structure, right? And it didn't do that. So this looked like this is going to go a little bit higher as well. Yeah, I don't like this one. I don't like the way this is set up. I'm looking for this to come back in here, possibly in here, and then we'll go short. Okay. Now, the good thing is we are in a very good key ceiling, if you will, in this zone. This is a very good area. You do want to short. We're not down here. It's not like we're shorting down here. We're shorting up here. So you're okay. I wouldn't buy up here. Wouldn't want to buy up here from an all-time high perspective. The last time we've been up this high, 2007, 07 there, 13, 14. Yeah, I we're in a good area to short, but not yet. If you want to short and keep shorting, that's fine. But I think I can tighten up my entry a little bit, especially when I'm seeing structure this week and it's bouncing off of this demand zone right here, and it didn't come down and creating this trend line of higher highs. Yeah, I'm thinking it's going to come back a little bit more and at least play with this area. So this is not a really good setup either. Okay. RDN, I'm looking for RDN to be a little bit more bullishness before it gets into a little bit more of a retail for me, and then I'll be ready to short it. RDN, not a really good setup for me. How about NCD yen? See if we get a better setup on that one. This didn't even go down as much as I would like it to. Let's see, how about this one? What a nasty range. So if you guys shorted it up here, which I would have done, exit, short it, exit, short it again, exit, short it again, exit. Maybe got a chance to short it, exit. Short it then. Yeah, I would be exiting that right now. It may come down a little bit low to short it, but the other yen cross is already starting to show some strength. I think we're going to be in this range a little bit longer. So I don't like it. If it comes down, great, but I think we're going to come back up here. And then that's going to be the break. That's the break that I want. I want that break. But This is a good short. Don't get me wrong. If you shorted here, that's great. Hope you can get out or move your stop loss to break even. And then if it does come back up, I would say if it gets here, oh my gosh, guys, this is where you would want to short. Okay. This is a good short. If it gets up there, okay, right here. This band. You see that band of orders that just coming up and just grabbing a bunch of buy orders in this supply zone? Yeah, that's where you want to short. So I am happy to short it. Not right now. That was a good short right there, but if all the other charts are showing yen starting to get, I don't see a bull candle here, which is great, like the other ones I did. But if I saw like a bull candle here, but I do have some imbalances here. This balance will get filled, but that doesn't mean it can't get filled like this. Okay, and get filled over here. So let me see. I would wait. It's right now. It's like you don't know which way it's going to go. It's in the middle of this range. I mean, like literally. What are you going to do with price when it's in a range like that in the middle? That's that's where you should be selling. This is where you would want to buy if you were scalping it. I mean, what are you going to do right now? You're not doing a darn thing. I don't know which way it's going to go. Going to go up? Going to go down? I don't know. But based on the other charts, I think it's going to go higher based on what I'm seeing, right? And I already looked at the yen index. Take a look at the yen index. If you guys have access to the yen index, take a look at it, and you'll see where the market's starting to look a little bearish on yen. And it was pretty weak on Friday, and that was like letting me know. Okay, so a little bit of bullishness on yen. NCD yen and odd yen with that. It's not really that beautiful setup. It's in the middle. Okay, let's look at chef yen. This was a nice trade. This the one we took this all the way down to this level, right? And it came all the way down close to right into our demand level right here. There's daily demand. Nice, 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 nice trade. Right there. And it pulled back. It's not going to break that. Nope, 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 nope. So that's a bullish candle. So guess what? Yeah, I'm looking for this to pull back right to the top of that level. Maybe even far as that. That'd be great. And then we're taking this thing all the way down, baby. So I'm gonna go to the 4 hour time frame and show you exactly what I'm talking about from a 4 hour perspective to narrow it down. I'm gonna give you this setup because this is one I'm really, really looking forward to. Okay, so I'm looking for it to get to about that level. In fact, I'm gonna put a chart along. Right there. Cross it up. Search APY. Yes, I want you bad. Come back. Hold back for me. Okay. So this was a nice, you see the swing low, swing high, nice pullback all the way down. It came back. Let's see. Look at this right here. You see how this price was from this fib right here, came all the way below our 50, right here. And it came out and bounced right off the basically the 886, if you will, fib. And it's starting to come back right into our premium retail right here. This is where I want to short you. So if yen is weak, I want to see more yen come back up here. Absolutely. And this right here, my friend, is a very strong supply zone right here, right at the 152, 300. Okay. So we have some really good confluence in this area regarding that supply zone sold off here. Then it came back up, grabbed a little bit more sell orders, came back down, came and grabbed a little bit more sell orders and took a lot of sellers for their money. Okay. Well, now it's starting to come back up, right? And it's going to look like it's going to be in a bull run. I think it's going to come in this area. We'll have some more buy orders. Yep, that's it. Even if it comes in this area, still a great place to short. Okay, especially with a supply zone all-time high of 1979. This is a pair that is really going to set up to pay back. Look, I'm just gonna squeeze 600 pips every time. Just squeeze it all the way down here, all the way. Look at it. I'm gonna go to the daily, all the way down right here. I want all of this. All the way down here. This is going to go down for the next 1 to 2 years. I have 4,000 pips. I'm gonna double that. I'm gonna get 8,000 pips out of this one for the next year or two. Okay. And every time this thing just drops, I'm just gonna every time it pops, I'm just gonna short it, pop, short it, pop, short it. Okay. Chef JPY does range at times, right? It'll range like this, up and down, up and down, up and down, and then up and down, up and down. It'll give it a nice trend every now and then, right? We will catch a nice trend. It'll just go just like this, right? If you stay on the right side of the charts, right side, make sure you stay on the right side. And the right side on this one is the bear side, right? Let the thing pull back, come down, get out, pull back, get out, pull back, get out, or pull back, get in, let it go, add, let it go, add, let it go, add, boom, break it. You can do that either way, however you want to get paid. But other than that, I'm looking for this thing to pull back. So Chef JPY, I am overall, not overtime, overall long term, I'm bearish, but I want this thing to pull back a little bit if I can get into a better price and get back in. We took some money on this one. We held this trade for 2 weeks. Beautiful trade. Let's get back and get some more. Okay. Okay, you're on. What we're looking for, you're on. Oh, that was a nice soda. Wow. That was nice right there. Nice, nice back in 2020. Came back up 2020, October, May, October, all the way back. 2020, right? 2 years ago. Came all the way back. Nice. All right. We'll take a look at the weekly, the monthly. I want to get the map, right? Got to get the full map, the map of the Euro odd continent, right? This is map. This is north, like that. So this is the north. This is the ceiling. This is the floor. This is where we go down. This is where we go up, and everything else in between. It's the same thing. We got the equilibrium right in the middle. Everything above here is premium. Everything down here is retail. All right, go down to the weekly. But now that's down. That was a nice peak way up here. It's like if price goes up here again, this is like it's like I don't want to say it's no brainer because you would have to have some experience, but for me, it's a no brainer sell. I'm not doing anything. In fact, I'm like take the buy button out. It's just nothing but sell here. I don't care what I'm doing. I'm just selling. Right. That's how experienced I am when I get into the zone. Right. When I'm in this zone, I'm not doing anything but selling. It gets down here. I'm not doing nothing else but buying. but we're not in the extreme high and we're not in extreme low. Like we're messing around here. So it gets very, very little bit tricky. So now you have to take that level and play it at a daily level. Okay. This right here at a daily level is that same area on a higher time frame. So this is that supply. And all the way down here are demands. Okay. Now, if you take this swing low and swing high, well, the demand level is about right here. And if you take this swing low and this swing high, well, we're still in premium. So whether it's there or here, it's still in premium. You should be looking for sell, right? Until it gets into this demand area, right? It's the weekly demand. And this would be a weekly demand. Right, so this would be a weekly demand level. Let me take that out. So I'm looking for lower prices, and believe it or not, I missed that sell. Oh man, that was nice. If anyone got 629 pips on your art, congratulations. No, congratulations. Guess what? It's coming back. So if you missed 629 pips, you're going to get another opportunity, not to get 629 pips or 640 pips. It's not going to happen. But you're going to get an opportunity to get back in. You see this daily supply level right here where it sold off? It came back, hesitated, got some indecisive candle, and then the institution got right back into play. You see where the institution got right back in with that decisive candle? Right there. That's it. That's the sell off. Well, it was so fast that it created some imbalances. So we're going to trade this by back up. So you can buy it back up. However, I'm not into counter trading, right? I got enough to trade, right? I'm getting a little older and I need some patience, and I'm not trying to get my blood pressure up here, just to see if I'm going to be able to get this. Right? I feel comfortable selling that supply. So what I'm going to do, I'm going to wait for price, get about right here. I'm going to put my chart alarm here for EA. I want to see price crossing up. I want to get that alarm. And this is what I'm going to be looking to sell. Okay. So short term, if you want to scalp it, bullish, you're on, get ready to short it. And this is going to be a nice short. I'm looking for, I didn't get that 640 pip. I'm willing to get 530 pips. All right. We'll get an opportunity to get some of this. Okay. That's where I'm at with your odd. Let's look at pound on. Ooh, pound on is already pulling back. Okay, so I'm looking for pound odd to come back up here as well. This might even be no, I like that euro odd. This may come up here. But okay, so I'm still it didn't break this low. That low right there when it came in. Still there. Just be the change of character. I think it's going to pull back and grab some more orders. May come up here and come back to this weekly and test this. Yeah, that's a strong weekly level. Okay, so I'm bullish short term. If you want to scalp this on your art, if you want to do a counter trend scalp between your art and pound odd, your art is a better one. If you want to scalp trade and counter scalp trade. However, I'm not going to do either. I'm just going to wait till it sells off. This is a bigger move right here. I like the bigger move. So that's where I'm at. Let me see. Equilibrium is way down here. But just from this swing and that swing, equilibrium is at least right here. We're not even there. We're still in premium, whether you're there or there. Price is just way too high for me to even think about buying. You want to look for shorts, okay? So let's look for price to come back up, pull back a little bit. It did have a bullish run here. So it looked like euro and pound was kind of strong. Pulling back euro odd and pound odd. So I want to look for a little bit more bullishness, and then boom, Monday, Tuesday, let's drop this bad boy. Set me up. Okay, euro pound and pound odd. I mean pound odd and euro odd. Okay, euro CAD, pound CAD. Where we at? Where we at? Let's go to the weekly. Let's see what this looks like on a weekly. Gotta get a map. Gotta get a map. Get a picture of this full map. Okay, this is the map. This is what it looked like. So that equilibrium. So right there in the middle. So slightly in the premium. A few more areas for supply. Wait, hold on. Did we hit that? Ooh, okay. Yeah, we did. Got that. Yeah, I think we're going to come back down to these demand levels. We didn't even get down to that level. I don't even think we got down to that level. But we did come down here. That's great. Came back up here. Got the supply. I don't think we're going to come back up here yet without a pullback. Then go higher. Yeah, that looks good. All right. I know I kind of make this kind of easy, but not that easy. So I do expect a little bit of rebalancing and pull some buy orders from down here, at least. Yeah, around this area, at least down here. I like to see it come down here, maybe down here, better down here, to be honest with you. I would love that. So with that being said, I'm going to, let me see where it's at right now. That was a nice M. That's like a perfect M. That was a nice double top. Nice double top. Like, yeah, that's an M pattern. That's it. Nice. Created some equilibrium. Institutional activities got too much sold off. Yeah, we need to come back. That was fast. That's unfair, man. You can't just leave a bunch of buyers just sitting there. So I think it's going to come back. Going to give a little bit of it more of a recovery, right? We had this demand area, small demand, and this the main demand is right here, and this is the main demand level here, right here. Came back up, mitigated here, a little bit of mitigation, from this candle here. Yeah, a little bit of a pullback. Again, I'll be looking to sort it. I like this one. Let me put it right here at this chart alarm. So you see, I think I'm gonna look for you on Tuesday. Your CAD. Yep. Pound CAD, Euro CAD, USD CAD. Ooh, that means CAD would have to be weak for this to happen. This would look like we're right at bouncing off of demand. Here we go. Okay, so this is where I'm at. I'm thinking for a pullback. If you want to counter trend you could. I think there's some imbalances here. Got a nice imbalance here. Coming back up to the supply level is a possibility. But overall, the bias for me, I'm bearish, but I'm expecting a little bit of short-term bullishness. Okay, Euro CAD. Okay, let's go to pound CAD. Let's see what that looks like. I'm not expecting a better setup than Euro CAD. Yep, I wasn't. See, you see how this was? This is not that great. 275 versus the Euro CAD drop. $469, right? So you can see how your pound CAD didn't provide that much of a setup on the downtrend. So let me see. It's still in premium, even from this swing right there. How about that one? Oh, we're still in premium. Yep. Okay. I'll be looking to short this. We didn't come close to this area. Yeah. Came slightly close. Okay, so here's what I'm doing. I'm thinking it's going to be at least in this area here. If you notice, I'm not going to put a chart along here. I like the better setup on your CAD. That looks a little bit more cleaner. Okay. Unless this comes up, I might change my tune, right? But in terms of comparison between EuroCAD and PoundCAD, just pick one. They're both the same trade. Don't overexpose yourself on EuroCAD, PoundCAD, like a Euro odd, pound odd, Euro NCD, pound NCD. Pick one, right? For me, this look like a lower low, lower high, lower low, lower high, lower low. I think we're going to go a little bit higher. But that's why I like the EuroCAD, a little bit set up. It looks like it may. I don't think it's going to come up and beat that double top. This one may come up and create a double top. But if it does, and it start to look bearish from there, then, and I get confluences with my other sources, yep, I'll be looking to short it. But if I got to pick one, pick the EuroCAD. All right, a little bit pull back on PoundCAD and then short it. Okay, how about Euro NCD? How about that one? Ooh, that was a nice drop. What was up with Euro? These Euro, right? 834. What was I at? Anyway, catch this one? Ooh. Did I call it? I Oh, I did call this one. Okay. I'll call that move up. Okay. 346. Okay. So a little bit more move. Did we come down enough? That's the point. Look at the weekly here. Did we come back enough? Ooh. What was going on here? This is back in 2009. And then 2010. So for the last 22 years, we've been in this range. Okay. So this might be an outlander. Not sure what happened. Obviously, I was not trading in 2009. No, I just graduated with my master's degree back then, so I was still in the corporate world. And then for the last 22 years, though, it looked like it's just been in this range. So we're gonna treat this as this range, right? So this would be the peak, the high of that range, the low of this range on the weekly chart, right? And we're like, let's see, are we above it or below it? I'm on the weekly chart still, doing some deep analysis if you don't mind. If you like to see how I'm doing it, this is good practice for you guys. That's a very strong weekly supply level. We can go ahead and mark that off right there. Yep, and a very strong demand level down here. That's the floor. Yep, I like that. My yellow for supply, my blue for demand. And what equilibrium? It's just kind of, let me just eyeball it. Like right there. Oh, damn, that's pretty damn good. Just eyeballing the damn thing. Okay, so we are in a premium in a premium area, your NCD, right? So that's good. So we did make this run all the way up to this weekly supply level, right? The likelihood of this going up here is very, very low. We can't rule it out. Okay, so about this swing right here. Oh, wow, we did hit the 50. Okay. Okay, so this thing could go up a little bit. All right, so I'm bullish on your yen, your NCD, sorry. Euro NCD bullish. I want to wait till it gets up here in this area to see if it's going to take out this high. Because if it doesn't, then we could be in this range, or we could come down and see lower prices like right here before we go up. Okay, so you're in bullishness. This right here would have been a great time to buy it, but right now it's not a great time to buy it, as you would be kind of getting late. But it's uncertain to see how much more it can go, or could it go here and then come back down to the lower prices? Right now, it's kind of hard to tell. But right now, I know it looked like it wants to go higher. There is some imbalances here. This is this daily supply level. It's a very good supply level. It needs to come up to at least here to grab more orders or exceed it to come up here into this weekly supply. That is a possibility. Therefore, I'm bullish on your NCD. Pound NCD. Ooh, that didn't even come down even lower now. Oh, not even. So this might have some more. We may go Euro NCD and pound NCD, maybe more bullishness. I mean, more bearishness. Ooh, that was 2015. I think we're going to come back down a little bit based on what I'm seeing. We haven't get down to this demand level. So this is just a level here based off of this daily demand. I would say that would be a nice daily demand level that we did come down to. If this is a stronger demand level, I like to see it just is lower between this swing low. So I am going to expect it to come up a little bit more into the supply zone, and then I like to see the sell-off here. So again, probably a little bit more, about another 57 pips. They've already bounced already 300 pips. That was a nice bounce. Nice bounce. Okay, so a little bit more bullishness on pound NCD. If this is your pair, to me, the Euro CAD and the Euro odd, between the three Euro and pound crosses was a better setup. But that could change, right? But right now, Euro NCD and pound NCD, these were great sell. But this is telling me that now it wants to come back. Now I want to see if it's going to take out that high or just create another higher high. I mean, just a kind of a higher high for more downtrend pressure. If so, guess what? I want to sell it. I do, but I want to wait to see what it does when it gets into the supply zone. Okay. All right, that's your NCD and pound NCD. Let's look at CAD Chef. CAD Chef, what are you doing? Ooh, that was a nasty CAD Chef drop. What is that? CAD Chef ranging parent, you moved 1,300 pips? That doesn't normally happen. This is CAD Chef. Look at this is a CAD Chef move. And then it broke out. I got that. That was like maybe 800 pip, and then you get this range. Look at you get this range from March 2020 all the way to about February 2021, like a whole year range, right? Think about it. This is the anatomy of a range pair. You're going to range like this from 2015 all the way to 2019. It ranges, right? That's what these minor crosses range pair goes. And then it dropped, it breakout. You get a breakout because there's some news, whether it's CAD or Swiss franc, breakout volatile news, finally breaks out of the trend, 800 pips, and then it goes into another range. Right here. And it goes into this range from 2020 to 2021, right? And then it breaks out for 500, not as much as 800 or 1,000, right? And then it goes into another range right here. Get into another range right there. And that range is from 2021 all the way to 2022. And then it breaks out a little bit, maybe 200, not much. And it goes right back into this range, if you will. So let's do this. Let's make it like this. Right here. Right. So basically this would be kind of an outliner. Right. So we got 2021 all the way to 2022. This is a great rendering pair. Just buy, sell, top and bottom, top to bottom. And then you get this breakout here. So I won't call it from the top of there. Let me just call it from this swing high right here, this break. Okay, 955 pips. Still, from this high right here though, whew, that's just unusual. So we got this range that was from here, 2022 to about March 2023, so December, March. So we're going to be in this range for a little bit. Okay, this is not that type of just in and out like the other pairs. So let me go ahead and reanalyze this like this. And then we're going to break out. And then we may go up. Okay, let me put that projection, right? So we may be in this range. So if you bought up here, then right here would be a good opportunity to make it and wash any positions you got up here. How? So what I'm trying to talk about is saying, if you were buying, and I know I called it buying, let's say you bought it here. Hope you got out, right? Maybe you bought it here, and you're holding, and you have some positions of buys here, some buys here, and it's in drawdown, right? What you want to do is, now that it's down here, you buy that. Every time it comes down in here, you want to buy. You want to buy. And then when it comes up, you want to get out, cash it out, cash it out, cash it out, cash it out. And then use the profits from here to wash away any positions that were in this area, right? And then you get out of the trade. That's how you do it. So I think this is going to come back down, right? It may go up right here. It's going to come down. It's going to come up. It's going to come down. Yeah, I'm going to do it like this. And then we might get out of the range, okay? So we may be like this for the next 2 to 3 months. So just be aware of that. Not a great pair to take long, but and hold it. This is a great pair to buy long, get out, buy long, exit, buy long, and exit, or buy long, cover, meaning exit, cover your profits, buy long, cover, and catch these little 250. These are about 200 pip ranges, right? Catch this little 200 pips every single time. Okay. All right. That's catch switch French, bullish, in a range. Euro pound. What are we doing, Euro pound? We going down yet? Oh no. Okay. You were, but you didn't go all the way down. Come on. Come on. Lower to high, lower low, lower high, lower low. I know what you're doing. You're gonna come back and give me a lower high. Okay. All right. Short term, bullish on Euro pound. And when you get into this area, I want to short you. Okay. It'd be nice if it comes up right up here to this supply area, to be honest with you. That's a I tell you what, it gets here. Oh yeah. In fact, I'm gonna put a chart on right there. That's like that's like telling me you get here. Yes, I want to short you. This is a very strong area to short because this is a very good supply zone, right? We've only mitigated once, twice. I can see it coming way back up here. Now, if it gets up here, um, it's not, let's put it this way, it's not premium enough for me to buy. Okay. Let me just take this swing low right here and this swing high of this range. Okay, this is another ranging pair like pound, Swiss francs, right? Because you can see how we're in a discount. This is where you would want to buy, right? So I've already missed that move. So I am going to allow it to move up because down here, it didn't go to a demand and I want it down here. I feel more comfortable, and this is me. You may feel comfortable about buying up. That's fine. It is looking to go up. We're looking at possibly 105 pip. I know, it's not much, not 600. It's not like the euro in 4 or 5, 600. The euro pound pair, but it's a high price pair, the most expensive pair. 105 pip is equivalent to almost 200 pips on a regular euro USD pair, right? The reason why I'm not inclined to buying it because there is a possibility, since it's a counter trend, in my opinion, because my bias is short, this thing may come give you a lower low, lower high, lower low. It may give you a lower high right here. So anywhere in this area is suspects. Okay. So I don't want to, okay, here, is it here now? Is it here now? No, is it here now? No, I want something definitely. Anybody want guaranteed money? I want guaranteed money. I don't want to guess. I got enough guessing it is already. I want guaranteed money. And when I see something in supply, I know it's guaranteed money because you got buyers, retail traders buying this up because they don't want to miss this. They missed this, or they got stopped out because of this right here, and they were going long because they thought it was long. Because retail traders would do this. They see this long, and then they see this pull back, and then they see it long again. Oh, it's like, oh my God, I missed that long. I want this one. And then boom, they get hosed, get stopped out. Right. So the market maker is going to push this price up, and then they're going to get retail traders start sweating, and say, okay, is it going to go up? It's going to go up. It's going to go. Okay, you know what? I'm gonna buy, and then they buy right here, and then price going to do what? Guess what I'm gonna do? I'm gonna sell it to them. I know I'm mean, but I can't help it. It's a zero sum game. I have to take somebody's money, right? So I'm gonna sell it to him while he's sweating because he wants to buy. And I'm gonna short it down to demand because I know that's my supply and that's my demand level. I hate to say that. I'm sorry. I have to follow smart money. I don't want that trader to take my money, right? I've done that early on my years. I'm done with that. It's time to win. Okay, so that's where I'm at. I'm going to wait for that. And I got my sold orders there. I'm going to wait for it to pull back. And let's just start to do some hesitations and I see some confluences here. And then I may take a chance, but I got to wait. Okay, because I see a nice fair value gap here, nice and balanced, nice demand level. We have not come back here. We have not come back and mitigated at all. Okay, once we get here, I will see if we're going to get through this area and go lower. Okay, because that's where I'm at with this euro pound pair. All right, just one of those ranging pairs. Let's go to the weekly. I'm going to show you what it looks like. This is the map. This is equilibrium, let's say about right there. What do you want to do in this area? And what do you want to do in that area? Now, if you say buy, you're wrong. You would want to sell. You want to buy when it's down here. Anywhere here, you want to buy. You have high probability. Anywhere up here, you want to sell. Probability, sell. Came up, sell. Got a little bit, sell. Got a little bit, sell. Got a little bit, sell. Got a little bit. Sell, got a nice one. Sell, you're going to get a nice one. It's popped up a little bit. Guess what? I want to sell it. When it popped up. I don't want to buy it up. Not in this area. Not on this part of the map. All right. Okay, awesome. Okay, that's where I'm at with euro pound. I hope you guys see that. If you guys want to learn more about that and you're watching it, and you're watching this on my YouTube channel, if you're, a potential person who's trying to learn more about following smart money and getting the concept, there's a lot more to this than what I just made from a picture standpoint, even though I'm trying to break it down simplistically and very simple to understand. We go into great detail. We got hundreds of hours live trading sessions where I break this down. I'm really redundant, and I'll try to make it easy and digestible of this complex thing to learn, because it is hard. But I try to make it easy as much as possible by trying to break down the simplest, most redundant thing to do that a lot of retail traders don't do, and they take it lightly. So if you ever want to learn, reach out to me, and we can get to learning something from there. All right, a couple more pairs, just minors here. Pound Swiss franc, look at this. That's ranging pairs, yeah. Already got it marked up. Take that out. Here we go. Bounce, come down, pound shaft, and then boom, right? I want to see Swiss franc is weak, right? So I think this is going to probably stay about right here, but we're going to bounce back up to this range. Okay, this is a ranging pair. I don't trade this pair often. It's just because it's ranging pairs. I get enough trading with other pips. This right here, this range is about anywhere between 200 to 400 pip range, and it's just up and down, up and down, up and down. So if you want to trade this range and I'm biased, I'm bullish, you want to do nothing to stay on one side, if you will. Just look for buys. And right now, guess what? Good opportunity to look for buys right now. Good opportunity to take this up. Okay, pound chef, I'm bullish. All right, CAD, another light ranging pair. You can tell this is just nasty ranging. That's the supply zone right there. You can see where it came up. A lot of liquidation. Boom, sold off. Right, came back up here. But right there, grab some more buy orders. Came up, came close. All this liquidation. Okay, so guess what? Liquidated to do what? Look like we're going down. Going down to at least here, possibly here. Got a lot of imbalances here. This is a demand area. It's been here quite a few times already. Right there, a lot of times, right? They come back one more time, most likely it could break, right? There will be no more buy orders to fill. Therefore, selling pressure, just continue to get in, take care of that imbalance, come in, take that demand, come back up, take care of that imbalance, take care of that imbalance. Those imbalances that were left from the big buy off when it took off. Okay. All right. So there's on CAD. NCD CAD. Where we at? You tell me. Sell, buy, sell, buy, sell, buy. If you say sell, I think you're ready to trade. Congratulations. And if you already sold, like I called it right here, that was my markup already from last week, then you're already up 147 pips. Congratulations. I think we're going to come back to this nice demand level down here. Yeah, I've got some imbalances here. And the equilibrium from here to here is in the demand level. There we go. All right. Congratulations. NCD CAD, more downside. Odd switch French. What are you doing? It should have took off already. Oh, I see what you're doing. You want to come back and get some more buy orders. Okay. All right. Yep, it's another one of those ranging pairs. It's It ranges, look at it breaks off, ranges, break off, ranges, sell off. It range right here, go up, and then it range, break, range, break, range, and then it break. And I think we're going to be in this range a little bit here. Let me do this. And then we'll go up. Okay. Other than that, I am bullish on Swiss francs. Like NCD Swiss francs. Oh yeah, same thing, the same pair. Pick one. Okay. So let it come down a little bit. It's not a bad time to buy. You want to buy right here. If you want to buy and wait for it to get a little bit more lower, that's fine. But I do think it's going to come down a little bit more. It's going to range. It's going to get a little bit of range. But I will say, anytime, this is going to probably be a range like this. Anytime it gets on the bottom end of this range, just buy. That's what I would do. Right? I don't like this pair. I don't trade this pair. For the simple fact, I don't like waiting for ranges to get a breakout like this right here, and then you just holding on, and your P&L is going like from profits to back to zero, profits back to zero, maybe a little bit of negative, profits back to zero. It's I want to catch more trend in pairs, and I get enough volatility from major pairs that it's not even part of my watch list, but it's part of my analysis because some people like, and CD chef, you may be from New Zealand, or you'd like ranging pairs, that's fine. And maybe you like to scalp. I tell you what, right now is a good time to look for buys if you're scalping this. Okay, you can get some nice little 150 pips on scalps. Okay. Odd NCD. Look at this one. Let me pull on a weekly. You guys see that? This is a nasty range of pairs. This is like another Euro pounds pair, except it ranges. Look at this range. Okay. If I was in this trade, if I was trading this pair, and this is the picture of it, let me paint the box of this picture on the weekly. And equilibrium is like right there. What are you looking for in this range? What kind of orders? Sell or buy? And if you say buy, you are on the right side of the path, right? Not to say that sells wouldn't be a bad idea, but the point is you'll be at the risk of something like this happening. What, you think it's going to break out in the upside? Well, yeah, look, we got to get back up here. There is a very strong order right there. And we're in a very strong demand down here. So yeah, I do feel it's going to go back up there one day, but it's going to be in its range a little bit, right? So this is one of those ranging pairs. Again, I don't like trading it for the simple fact that it's just ranging, ranging, ranging. Now, if you go to the daily, now it looks like it's trending really, really nicely. Sure, that's when I like to trade it. I like to trade it when it gets to the extreme level on each end. That kind of makes sense. So with this being said, on this particular one, we had the swing low, came all the way up here, came all the way down here to 886, down there 886, perfect. Came back up here. We're done with this swing right here. From this swing low to that swing high, we came all the way up here. Now we're looking more bullish. So now let's flip the script, and I teach you how to do that with the fib. And now we're looking to get above here, right? We got above here to 618, and we came back down. Now we flip the script again, and we're doing this one, right? Now we went up, and now we came all the way to 786. Guess what? Yep, we're looking bullish, right? So we're going to draw our demand levels, supply and demand levels. Oh yeah, you saw it. There you go. And that's what I'm projecting to come back up to this range. We're going to come back up here. This was the swing low of the range right here. That was the swing high of the range. We just came back down. We came back this far, came back up. We're in this middle of this range. And I think we're going to come back up to this supply level here. I think we might come up here. Now, I could be completely wrong, and it needs to come all the way back down. But in my view, from what I'm seeing from this swing high to this swing low, we came back to the 786. This is what I'm talking about from here. Here, we came all the way down to the 786 level, came up here, came back down to the 786 level. We're still in the premium and the discount to buy. I can't sell down here, right? Because it may potentially go down more. So this would have been a good area to go along right there. Perfect. Right off the weekly demand level. Key, beautiful, nice area to buy. And that would be your right off the demand. And I like to see it come up to this particular daily. That would be your daily supply level. Okay. All right. So we got about 188 pip potential. Scalp trade. Go for it. Me, I'm going to wait till it gets up here. Right? When it gets up here in this level, right, that's when I'll be looking to trade it. When it gets down to these levels, that's when I'd be ready to trade it. Like this one right here would have been a good trade for me to get in. No, yeah, until it gets back up here. Okay. So audience CD, I'm bullish. If you sold it down here, that's great. Hope you got out. That was a nice scalp trade, 296. Double bottom in the weekly demand level. Looking to go back up. Okay, so that's odd NCD, and I think we got one more. Euro Swiss francs, another range in Paris. All right, are we ready to go yet? There we go. Why there? Well, this is the buy off from this demand zone. Yeah. And we're taking it all the way up here to the supply level right here. So that is eventually where we are going to go. This is the target, ultimate target right here. Imbalance right here. You see that? Eventually where we are going to go. That swing high, this swing low. And we're just ranging on our way over there. Okay. So it's going to look just like this. Until we get a breakout. Okay. So right now, ooh, over time to buy. This is a good area to buy. If you want to catch any range and pair setup, this is probably a better area. right? So I'm expecting, yeah. So Swiss franc is going to be weak, seasonality. Swiss franc, USD Swiss francs, Oz Swiss francs, US. Look, okay, this is Euro Swiss, right? Euro Swiss francs. Let's look at it from a summary standpoint. Euro Swiss francs, where are we down? We're on the bottom of the range, right? Euro Swiss francs. This is looking to go bullish. How about NCD Swiss francs? Where are we at? The top of the range or the bottom of the range? Bottom of the range. This is looking to go up. Okay, Oz Swiss francs. Okay, where are we at? The bottom of the range or the top of the range? This is looking up. Exactly, right? Yeah, bullish. Okay. No, how about pound Swiss francs? Are we at the top of the range or the bottom of the range? Bottom of the range. Go up. See, you can just basically push buy on pound Swiss francs, Oz Swiss francs, NCD Swiss francs, Euro Swiss francs. You see how that works? Now, that Swiss francs on the quote side of the currency, do we have any Swiss francs pair, any other Swiss francs pairs? Yes, we do. We have two more, but they're on the base side of the currency, right? So if everything is going up on this, what about Swiss francs JPY? Well, I've already called Swiss francs JPY a little bit bullish, but it's not because of Swiss francs. It's because of the more about the yen being weaker than Swiss francs. So I think even though the Swiss francs is going to be a little bit weak, I think it's going to be just short term, just because Japanese yen is going to be a little bit weaker. So in this regard, this is the only one that I would say Swiss francs. It's not to be strong, but it's going to be more about the yen weakness. Now, there is one more Swiss francs quote side, which is the right-hand side of the pair that I forgot to call out, and that is USD Swiss francs. Yeah. So what do you think we should be doing? USD Swiss francs, buying. Hold on. Correlation. I'm giving you guys a quick lesson and we'll close out the call. Cash Swiss francs, buy. Pound Swiss francs, buy. Odd Swiss francs, buy. NCD Swiss francs, right here, buy. And Euro Swiss francs. Woo! All right, guys. So that's a quick lesson for you. If you'd like to learn more about that and how we find that in the other setup with intermarket correlations, and I'm more of an intermarket correlations experts and becoming more of a price delivery forecast as we get more and more accurate with the resources we have, which is great. It's the next elevation of really getting to the next level of your trading journey when you can just do two of the basic things very, very well. And our coaching students are doing that every single week and getting better every single time. And that is number one, determine direction. And number two, timing. You get those two, wow, you become unstoppable. Okay. Other than that, I'm going to go ahead and close out the call and have this recording available. Other than that, I'll see you guys coaching students in our live trade room session. Everyone else, be careful out there. It's going to be a great week. Look like some good moves and good setups. Enjoy your week, everyone. Okay, awesome. Bye-bye, guys.